Hey there, it's Mike Wise, CMG Home Loans, and your weekly mortgage update. Wanted to wish you a happy 4th of July. Hope you're going to enjoy this long weekend. Hot dogs, burgers, parties, vacations, whatever it is. I hope you have a great 3-day weekend. The end of the day, this week, it was a little bit of a shortened week for me. Was gone on Monday for most of the day, and tomorrow is off, is Friday, so it's been a short 3-day week here. What's happened as far as mortgage rates? Well, it's all about the jobs and where the Fed is going to move with the Fed funds rate. So let's take a look at the jobs. I'm going to try and do a couple of different things on my screen today, so bear with me on this here. So what we're going to do here is we're going to take a look at the Vibe board here. And on the Vibe board, what we're looking at here is the ADP report. The ADP report, that's the employment report for June of 2025. And as you can see, which I crossed out here, 33,000 jobs were, it was down 33,000 jobs. So the estimate here was for a plus 95,000 jobs on the ADP report. This was a big miss as far as the ADP report came out. The expectation plus 95,000 jobs, it came out minus 33,000 jobs. So by business, the small business was down 47,000. Medium-sized businesses were down 15,000, and then the big companies, they were up 30,000. So leisure and hospitality was kind of like the main area where the jobs were created. It's summertime, that's where the jobs are being made, so that's where the jobs were created. And then education, professional businesses, all those things, those were down for the month of June. Now, if you look at stayers, job stayers, so that's people that are staying at their company, was at 4.4%. That came down a little bit, so there was a little bit of movement there. And then job switchers, that came down. So people are staying at their jobs for a longer period of time. And that means that other companies are not hiring. So let's take a look at this next page here. We're talking about the birth. This is the BLS report. So this came out today, Thursday. So this is talking about jobs as of for June of 2025. Now this was a big difference and a big miss as far as what the economists were thinking here. So this was the jobs report. 147,000 jobs were created in the month of June. So this is much different than the ADP report. They were estimating about 110,000 new jobs were being created. So this basically crushed it as far as the jobs were concerned on the BLS jobs report. So again, a big difference here. And then plus there was revisions up 16,000 for the previous month. Now they've been, or previous 2 months. Now, that's been changing as of the last 2 years. They've been revising them down. This time they revised them up a little bit. So this is a little bit different than what we've seen. So what is in the job market? Is it strong? Is it not strong? We don't know what's going on because there's a lot of conflicting data here. Now, when you look at the household survey, the jobs were created. 93,000 jobs were created. The participation rate went down slightly, and the unemployment rate went from 4.2 to 4.1%. What happened here is that the total labor force went down by 130,000 people. So that means that there's 130,000 less people looking for jobs. What happened there? That lowers the unemployment rate to 4.1%. Economists were expecting it to go to 4.3% from the 4.2%. So they were expecting the unemployment rate to go up. Well, what happened is a lot of people came out of the job market, stopped looking for jobs, and that's why that report got worse. Now, where did the jobs come from? This is very interesting here. So the government plus 73,000 jobs, and then state and local was 63,000 jobs. That's where they were created, along with healthcare and hospitality. So now, this is the interesting part to me, is this non-seasonal adjustment. They adjusted this number by 542,000 jobs. Now that's kind of weird because state and local education, we're in summertime, right? So summer, you would think that the jobs would go down. It's very interesting that they made this huge revision. Almost 600,000 jobs were revised. So there was a $600,000 or 600,000 revision to this. So that, if you take that out, the job market is not as strong as what it was. So this is a very interesting thing as far as this is concerned. Now, this is a little bit of data, just wanted to show you, but basically the average hourly earnings went, it was up 0.2%. The hours worked, though, went down from the 34.3 to 34.2, and the weekly earnings went down as well. So what's happened is people are not working as much overtime on their jobs. And so this is, because the employers are a little bit nervous going into the future here with what's going to happen in the economy. So give me a hot second here and let me finish this off here and get to the right spot. So I'm going to show you a couple of different things here. What happened? So what happened to the Fed watch? So this is the probabilities of the Fed actually changing rates. So this is for the July meeting, okay? Now, this is just a weekly kind of snapshot of, you can see up here, this is the weeks that we're looking at. So it's gone from a probability of like 80%, less than 80%, around 75%, of as far as having a no rate changes whatsoever, to just today, it went up to basically 90% that they're not going to change. And so you can see that there was about a 22% possibility that they were going to change rates in July or lower the Fed funds rate down to the 400 basis points on the Fed funds rate. That went down to just basically like 7%. So there's a pretty high possibility as of today, based on today's information, that they're not going to have any reduction in the Fed funds rate. So if you thought that was going to happen, it probably is not going to happen at this point in time. And you can look at some of these headlines, but basically, at the end of the day, the Powell cites the solid economy, right? And then Trump is criticizing the Fed and their decisions. Trump wants the Fed funds rate lowered so that they can refinance some of the debt that we have as far as the bonds that we have out there in the government, so that our interest payments are not as high as what they are, so that can bring down the cost of what it is costing the U.S. to issue and pay for all of those bonds and all the debt that we have. So here, the jobs market is starting to fall apart. That was a couple of days ago on July 2nd. So there's a lot of different things here that are out there that are showing that the economy is not as good as it sounds. But, we got to wait and see what happens here with what's going on. The stock market is doing well. The bond market is, you can see here, this is the yield that we're talking about. The yield, we had a nice movement down in the yield, and we were moving towards that 4.12% on the yield there, but we could not get past that, and to a point where the rates would be lowered. So what we're seeing here is that today, because of the jobs report, the yield is moving up. We're at 4.33% right now. And so we're right in this range of the 200-day moving average and the 100-day moving average right now. And we kind of want to hit stop at that 200-day moving average so that we can move back down and get into this range from 412 up to the 430 number here. So we'll see what happens. Let's take a look real quick here. I'm going to go to another site here, mortgage rates here. And let's see here. Today's mortgage rates, we're looking at 6.75%. So when you look at 6.75%, that's up a little bit from last week. I think it was 6.69%. So we're right just a tad bit over where we hit bottom for this week. So the end of the day, mortgage rates, they're not moving much. We're hopeful to see a little bit lower rates towards the end of the year and move those rates down. So at the end of the day, we're kind of right where we were last week, just a tad bit higher on the 30 fixed mortgage rate. So I hope you have a great 4th of July weekend. If you have any questions, please feel free to text me, call me with anything that you might have over the weekend. Otherwise, we'll see you next week.